Hey guys, we can plan all we want during the weekends, right? Have our trade plan in place as a swing trader, but when it comes to the actual trading day itself, when we want to manage our open positions as well as manage our execution zones, as well as manage opening new positions, that is a very big hurdle to a lot of newer swing traders, because when we do all analysis and our trade plans, it all seems pretty easy after a while, after you have planned for many long days. But after a while, you tend to get the fear of, touching that buy or sell button, maybe because of a bad event that happened before, maybe you lost money on the trade, or maybe something just hinders you, right? Just there's so many obstacles when you analyze on the day itself that you forgot your trading plan, or that you're just unwilling to hit that buy or sell button. And that often leads to a loss, a profit turning into a loss, or not even opening any swing trades. So in the end, you're not really doing much with your swing trading, even though you're analyzing. Okay, so today, although most of my content in here, Stock Estate, right, is centered around crafting your trading plans, finding a good stock during the weekends, but today I'm just going to talk a lot more about trading day and what I personally do to help myself stay consistent, and as well as open swing trades when I feel that there's logic as well as my trade plan is aligned together. So the first thing you want to do is, first you got to find a consistent timing. All right, find a consistent timing. So what do I mean by that? So finding a consistent timing is very important, and this is a very varied throughout for different people in different countries, different time frames, different responsibilities as well. For me personally, because I live in Singapore, and while the US market, I play the US market, so when the US market's open, it is normally 9 p.m., 10 p.m. here in my home country. So most of the time, around 12 or 1 latest, I got to go to sleep, because tomorrow I'll have my own work, I have my own responsibilities that I have to do for the next day. So I probably won't be trading actively till like 4 a.m. until market close. So that means I have to do my trades between 9:30 when the market opens to maybe around 12. So this is my time frame that I'm working with. So for me personally, I would avoid the first 1 hour of trading for swing trading, and that's what I recommend for a lot of people, because the first hour is the most volatile, where all the scalpers, day traders, and everyone is just trying to get in on the action, and that's where a lot of whipsaws could happen. Market makers are trying to finish up the move that they wanted to do yesterday. They're trying to finish up the last move from yesterday's trading day. So a lot of volatility is going to ensue, and personally myself, I don't take part in the first half an hour to the first 1 hour of the entire trading day. So that limits my time frame to around 10:30 to around 12 o'clock, preferably, right? So set yourself a timing that you will start to execute your trades consistently, so that you are able to stay disciplined and will not be like procrastinating a little bit. Just like how you procrastinate in everything in life, kind of. I'm not sure about you, maybe you don't procrastinate, but sometimes I do, sometimes as well. But if you do not have a system in place, right, as read in many books like Habits of Highly Effective People, you don't have a system in place, that's where you will start to get lazy. You will avoid yourself that, hey, there's no good setups for the day, I'm not going to do it, screw that. Then just close your computer and just like sleep for the day. Alright, so for me, I'm going to tell myself that around 10:30, I'm going to start looking over all the charts, to see the first hour of trading, does that affect any of the execution zones that I actually wanted to execute my plan at. Has it moved the price target, the price action towards where I wanted to execute my swing trades? Alright, so if the answer is yes, then we want to really start taking a look at it. So from 10:30 to around 11, I'll be doing a quick analysis of all the stocks that I've been watching, right? Figure out the price movement, maybe look at some of the technical analysis, as well as refresh some of the things that I wanted to, my trading plan, to have a firmer grasp on what I wanted to trade. Then at 11 p.m. on my side, right, which is US 11 a.m., right, I would normally start to take some trades, right before the lunch hour. I'll take my trades, with a clear mind, execute those that I wanted to execute, open some new positions, close some old positions, and I just wind down and go sleep by 12 o'clock. Alright, so that is just basically my time frame for executing swing trades. So it requires very less time on the actual trading day. It's just a quick glance through, and sometimes I even execute my plans at 10:30 to 11, and I'm done. As you do it more and more, you get better and better with it. So the first one, really set a time for yourself to really sit down, analyze again, and execute. So that you can stay accountable and stay consistent, right? And you will hold yourself accountable to sit yourself down and actually do it. Because swing trading although it is something that's on the side for you maybe, or something that you wanted to do on the side, but ultimately it's something that will earn you money, and you got to dedicate at least a little bit of time during the day itself to, you know, do such a positions, because you are really competing with all the professionals out there, and a lot of people who are taking this really seriously. So if you don't really take it seriously, then, you know, there's not a lot of money to be made for you guys as well. Second, before you do a buy order or a sell order, make sure to take a look at the overall market conditions and see whether it aligns with your swing trade positions. Okay, we all know that the overall market goes in a three-way cycle where it goes from a buy, alright, then a sell day, then a sell short days. So this is the normal cycle that the market normally takes place. But however, we need to know that there is shock events which normally disrupt the entire, you know, sequence of these events, because it may become of, you know, the pandemic news, or it can be bond yields. So look out for this kind of sharp and shock events which may reverse or reset this 3-day cycle of buy, sell and sell short. So we want to take position on the buy days if you're long, or if you're shorting the market, you want to short the markets on the short days or the sell short days. So this is how we want to, you know, look at the overall market conditions before taking our position or closing any positions. Yes, definitely one person could make a lot of money if they swim against the crowd and they take positions against the overall market conditions for some special stocks that are not really associated with the overall trend. This may yield great profits, but however, overall win rate and average win rate will definitely increase if you take positions that the overall market cycle will actually support for the next few days. Okay, and definitely make sure that, you know, the overall markets that you're analyzing, right, the overall markets, those indexes that you're analyzing, right, they are the ones that are relevant to the swing trade stocks that you're actually analyzing as well. So it doesn't make sense to go and analyze the Russell 2000 when you're actually trading a mega cap company or a big cap company, right? Because Russell 2000 are the smaller cap index. And if your company isn't really in the S&Ps, or it doesn't really move with the S&P 500, then you analyze the S&P 500, there's no really, you know, any point in doing so. So make sure that you're analyzing the indexes or the overall market trends that are relevant to the swing trade stocks that you are swinging. So by taking a stock that is moving a little bit more volatile, the beta is a little bit higher than the overall market, this allows you to, you know, get bigger profits and bigger volume throughout the entire trading day. Okay, but that's more on picking the stocks, which is not today's video's topic, which is more of execution day, what I want to do on the actual day itself. Right. Also, okay, make use of the daily 90-minute time frame that characterize the short-term markets. So again, for example, 9:30 to around 11 o'clock is one cycle, then most of the time 11 to 12:30 is another cycle, so on and so forth to the end of the day. So this kind of 90-minute cycles are quite prevalent, where the market often changes its tone or its trend from a bullish one to a bearish one, or vice versa. Alright, and the last tip for you guys is actually more of a precautionary one. And what do I mean by that? So I want you to avoid emotional bursts, okay, and stand aside when the entire market gets emotional, okay? When there's a lot of red candles that's bam, 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 bam to the downside, right? Okay, don't be sucked into this emotional news. Or when you see the market going up rapidly, okay, control yourself, stand at the side, choose reaction, okay? Reaction over getting involved immediately, right? You want to choose the price target or the action plan that follows after this emotional buying and selling, because most of the time when there's a lot of emotional burst on one side, the opportunity often comes from the opposite, which is, you know, when there's emotional buying, selling short might be the way, or there's a lot of emotional selling, buying might be the way most of the time. And that's, you know, the biggest profits, you know, comes from this kind of divergent opinions, and really successful trading careers have been built on that. Okay, and the most uncomfortable trades sometimes are the most profitable ones. Okay, I think many of you would have understand that when you see certain trade, you'll be like, hey, I should have went in, right? I shouldn't have done that. You know, I should have done this. Okay, I should have entered. Okay, why didn't do this? Okay, on hindsight. Okay, so that's actually very important, you know, when you want to swing trade these kind of events. So again, characterize the entire market trading day, whether it's a very volatile one, whether it's being characterized by choppy markets or whipsaw, or is it a very trending kind of market, and you want to react accordingly. Okay, and that's all I have for you guys, everyone. And, you know, I hope you guys enjoyed the video. Okay, smash the thumbs up button, subscribe to the channel for more informational videos like this one, and let me know in the comments below what you like about this video today. And stay safe, and I'll see you again in the next video. Stocks it up.